Good afternoon, everybody.
Good afternoon.
Hi, Vanessa. How are you?
I'm good, thank you. And you?
Just fine, just fine. Enjoying
Awesome.
lovely weather.
Awesome.
Okay. It looks like we have a few more people to come in. Let's give them a few more minutes. Then we'll begin. Paris, can you hear me?
Yes, Hardis here.
Hi, Hadis. I have a question for you.
Yes, sir.
Do you know a lady by the name of Myra Bullitt?
Myra Bullock. No, that name doesn't ring a bell.
Hmm.
But all the Bullocks are related.
That's why I'm asking.
Yes, sir.
Are you related to Bullitt, who used to be a lecturer at COB one time ago, and then Bahamas Baptist, etc.?
I love to hear the name.
Yeah, I'm trying to remember his first name. Autry. Autry Bullitt.
Audrey Bullock. I think I'm related to that person.
Okay.
Yeah.
The reason I ask because I know most of the Bullets are related somehow.
Yes.
I knew him back in the day when we were very young lecturers at COB. And then something happened and he went to Bahamas Baptist College, but I hadn't heard anything more about him. And I was just wondering because, I'd like to see him one more time. He was always a protagonist, somebody who always had the devil's advocate thing going, which was good for any system. So, yeah.
Okay.
Just giving the others a few more moments and then we'll begin. Okay, 10, and might as well get going. All right, Vanessa, you're there, yes?
Yes, I'm here.
Were you here last week, Vanessa?
No, sir, I wasn't.
Okay, I didn't hear your voice and all that blah, blah, blah. Okay,
Yeah.
welcome back.
Thank you.
Believe it or not, we're already in week number 9 today, which means that we have 4 more classes before your final exam. So, of course, as usual, I encourage you to just keep reading, stay on top of your reading. I will soon be assigning some stuff to kind of force you to practice a little bit. Hopefully, you're all taking questions from the back of each chapter, like the last time, and doing them on your own. That's always good. My assignments are just to kind of get you into actually dealing with it, and I'm hoping that somewhere along the way somebody would get stuck on something and then make a note, bring it back to class, we talk about it. That's really what I hope to get out of the homework exercise, other than just the pure practice of doing it. Okay, so that's my real reason. I'm not trying to make you miserable. All right, Felice is here. Okay. Clinton. Clinton.
I,
Good
I,
afternoon.
I'm here. I'm here. I'm here.
Okay,
Sorry.
here, Clinton.
Yes, sir. All is
uh,
well?
Good. How are you doing?
I'm good. I'm good. You know, had a long day at work, but I'm good.
And and guess what?
Yes, sir.
You've only just begun.
I know.
Depending on how old you are, you have a minimum of 30 years left.
Yes, sir.
How about that?
Still a young chap.
And you're single, right?
No, sir. I have a fiance.
Uh-uh. Oh,
God
well,
bless you.
sorry. I shouldn't say uh-uh. Uh, sorry.
Mario is gonna be with.
I'm just being the devil's advocate again.
Oh man.
Trust me, I get it. I get it. See, because when I was dating my wife 30 a million years ago, over 30 years, let me put it that way. I used to say that too. This is my fiance. And then somebody had the audacity to tell me, well,
You know what I'm for?
yeah, we'll see if that converts into
Oh, okay.
oh boy.
Yes, sir.
So yeah, so you still have to get married.
Yes,
Then
sir.
you still have to survive the marriage. Then you
That's
have to have
next. It.
children. Then you have to survive the children. So you have a lot of things on the agenda, yes?
Yes, sir. But I mean, it's slim pickings out there, so you might as well come off the road.
Yeah.
The pickings are really slim for real?
Yes, sir.
My. I thought that only applied to guys, but apparently the girls are slim pickings as well
Eh,
for some reason. Sorry for you people, you youngsters who are just getting started. Okay, but hang in there. Don't let
Yes,
that
sir.
discourage you.
Yes,
Go
sir.
ahead and do all that crazy stuff and let it kill you. Not kill you, but you know what I mean. Do it.
Yes, sir.
Do it no
You know,
matter
make
what.
it stronger.
Absolutely.
Yes, sir.
I guarantee you that. Okay.
Yes, sir.
All right. Trust me, I've been there, done that. Know exactly where you are. All right. Good stuff. Mario.
I'm here.
Hey. The other one looking for slim picking. Okay. Mario, do you have a fiance as well?
No, I don't.
Well, talk to Clinton. He can give you some
I'm sure he
some
can.
pointers on how to get one among slim pickings.
You best be a good lad.
My. To be young again and go through all that madness. Daniel.
Good night.
Hi, Daniel. How are you?
I'm good.
That's good. That's good. I'm trying to keep these young fellas motivated because guys tend to get demotivated too quickly. Correct, Daniel?
I don't know if you have to ask the guys if they get demotivated too quickly. I can't
Guys,
answer.
that guy, Daniel's turning it back to you. Do you guys get demotivated too quickly?
I wouldn't say so.
Okay, that's good. Because that's sometimes the difference between our men and our women. They might cry, then they wipe their tears and keep going. Guys get really mad and stop and don't move anymore. So what's wrong with you? I'm not moving anymore. Then another one bites the dust. See my point? So do what our girls do. We have to cry, wipe it off, and keep moving. How's that? All
Sounds
right,
good.
just don't quit. Okay, Danya, way to go. Welcome aboard. Danya's here. Danya,
Hi.
are you single or married?
um, uh, married technically.
Technically, just when I thought I've heard everything in my life, something else comes up. Man, you're really
I will
never
be
too
married
old.
technically.
You're really never too old to learn. That's for sure. Danya, that is amazing. I am at your disposal. What the hell does technically mean?
I'm married, but I'm separated.
Okay. Then yeah, that works. That works. Okay, fantastic. Well, Mario,
I'm listening.
well, do I say more?
No.
I am trying to set people up. All right, welcome aboard, Danya. Okay, Crystal, are you there?
I'm here. Good evening.
Good evening, Crystal. Welcome back to the Titanic. Blaine,
Good night.
good night, Blaine. How are you?
I'm good and yourself.
Just fine, thank you. Trying to keep up with you young people. Okay, Denise. Hmm. Where
I'm here, sir.
are you there? Wonderful, Denise. I was just beginning to wonder if I should pick up my phone and send out an APB.
No, sir, I'm here.
Okay, wonderful, wonderful. Herbenique. What happened to Herbenique? Last but not least, Chanel. Chanel.
I'm here.
Okay, Chanel. All right, way to go. Okay. I'm not going to say anything about anything unless somebody asks me, and then I'll decide what I'm going to say then. Welcome aboard, everybody. Are we still in chapter 6?
No, it should be in 7, eh?
Did we finish 6?
I don't know. I thought we did, classmates.
I'm
Sir,
just checking to see if we're all on the same page. Does everybody agree with Crystal? Are we done with 6? Are we done with all those journal entries?
We have the supplement of chapter 6 left.
I agree. We're done.
Yeah, well, the supplement, have fun. I'm not gonna hold you responsible for the supplement for the test, but read it because it will augment a lot of what you did in chapter 6 proper, okay? Remember, when you are reading the supplement for 6, if you get stuck on any issue, please write it down, bring it back to class, raise it, because whatever you say might be very helpful for someone else in the class, okay? There's just no substitute sometimes for doing that, for sure. It's like practicing questions. Accounting is 80% practice and 20% the other stuff. Okay, so the more you do it, like anything else, the better you become. All right. I'm just looking for a little problem to whet your appetites a little bit. Okay, why don't you turn to page 293 for a moment in the chapter assignments. I'll be assigning homework again for you to practice very soon. Just want to give you enough to put under your belt before I do that. Is everybody on chapter page 293? Oh,
I'm there.
okay. What do you see on page 293? What's the question?
I see questions for gross profit method, management issues, inventory ratios, and effects of inventory errors.
Okay, so that's the new text. Okay,
Yeah.
let me share my screen because I want you guys to see what I'm saying. Give me 1 second. Let me share the screen for a few moments. Share screen. Let's see if this works. Share. Can you guys see my screen?
Yes, we can.
Okay, great. Look at page 92, 93, preparation of the income statement. I want you guys to have a look at that and pretty much tell me how we go about calculating net income. There's a little blast from the past and then a little bit from the present. How do we go about calculating net income? First of all, would we be using a classified income statement or a simple income statement?
I think a simple could work. Not
The
a simple, but like whichever one is used for manufacturing companies.
Yeah, first of all,
Not entirely
Well,
sure which one it is.
no, I'm glad you're throwing those out. First of all, you're getting warm when you say for manufacturing company, but can you look at this income statement and say whether it's a manufacturing company or not?
I think you can because it is of cost of goods sold and it is of gross margin and all of that. Oh, multi-step.
Can we do a multi-step statement with this?
I think we can.
Okay.
I think we have to.
Is this a merchandising operation or a manufacturing operation?
Merchandise,
Yeah, merchandising. How do you know?
because it says cost of goods sold.
Because
And
it says
sales.
cost of goods sold, which means that the goods are already what?
Made.
Manufactured, correct. Okay. If this was a manufacturing company, you'd be calculating cost of goods manufactured. Okay. So that's a very keen observation. So then right off the top of our heads, how would we go about preparing this income statement?
Well, you get the sales and
Yeah.
then you last cost. Sorry.
Revenue, yeah. The revenues minus the costs and expenses.
Okay. Now, before we get all the way there, what do we do with sales returns?
Minus them from the sales to get, what is call it? Net sales.
Yes, sales returns are always subtracted from sales because remember, sales returns are those sales that are coming back,
Oh.
those items that are brought back. All right, so we have to subtract them from our overall sales figure to come up with net sales. Now, once we have net sales, what do?
Calculate the gross margin by
doing what?
minusing the cost of goods sold from net sales.
Yeah, subtract cost of goods sold from net sales will equal gross margin, and then
Tell you the truth, that's as far as I remember.
that's pretty good actually, because the rest of it after that, you remember the hard part, which is interesting. After you reach the gross margin, then you just subtract your expenses, which is freight, selling,
Trade in and selling expenses. Oh,
and
the rest of the
general
stuff.
administrative expenses. All expenses are deducted from gross margin.
Boom.
And then at the end of the day, when we subtract all of our expenses, we have come up with net income or net loss.
Boom.
Who has a calculator in this class? No one?
I do.
Yeah, you do need a calculator for accounting. You never know when you have to reach for it. Okay. Can somebody quickly calculate the net income or loss for this company?
Okay, so what's net sales? Minus 2.8. That's gross margin. Minus. I get 45,800, but I feel like that's wrong.
Why
Do
do you
you? Because they're too low. Like usually this book examples just be like in the 71s and around there. But
I'm sorry, I'm not surprised you said that. I understand it completely. Students always do it, trying to figure out what number looks reasonable. And I'll say it again, don't worry about what number looks reasonable or correct. Just follow the rules, and whatever results you get, you get. How's that?
okay.
So what did you get for net income?
I gotta go up again. It's like 40 something. Like I think it's like 45,800.
What's the
Anybody
formula
else?
again? I'm sorry, I'm lost.
Okay,
Where
what's
are
the
we?
formula again?
Okay, minus sales from sales return to get net sales. That's 4 498,000 minus, oh crap, minus 23,500. That brings us to net sales of 474,500. Boom. Now I need to calculate the gross margin. So we take away 284. See, ooh, 284.
Cost of sales.
To get the gross margin, which is 190,500. And then we just less the rest of the expenses, which is freight and selling expenses in general and administrative expenses. This is my question. Do you subtract freight in from the gross margin or you add it? Oh, that depends on whether or not it's like a FOB shipping point or FOB destination, something like that.
Well, it could depend on that, but the key is the question you asked before. Should you add or subtract freight in?
Yeah, I would appreciate if you could answer that question because I don't
Me too. I'm
really
confused.
myself.
I'm confused. Mr. Wilkinson, I'm confused.
No.
Where in the book is the formulas, I guess, or where are we looking, or what is, I'm confused.
Okay, where are you stuck?
You saying we're looking for net income, right? Now, where are these formulas, I guess is what I'm asking, like how we had like the, right?
Oh no, I see what you mean. There isn't a standing formula. We just create a formula by going through the process of calculating net income. So what we say is it's not really a standing formula, but once we understand it, then we can say the formula is. And here's what we mean. In order to arrive at net income, you have to take your sales figure and subtract sales returns, as he said. And that will give you net sales of whatever that is. And then from net sales, we subtract cost of goods sold. And that will give you gross profit or gross margin. And then from the gross margin figure, we subtract all of our expenses, including freight in.
So I was right. Dread. That's going to bring us to, I think, 45,800.
If you did your math correctly, then that's what it should be.
Boom.
Okay, and that's it. Now, if you say, well, where's that formula? Well, we don't really have the formula sitting in the text, but we learn the process and then we see it as the formula for net income. Okay, and that's why doing it a couple of times is really your best thing. Okay, that little practice thing. Do it a couple of times, then he says, oh man, this is a piece of cake. Why the hell was I stuck on this in the first place? Okay. All right. Okay, just wanted to keep that fresh in your mind, especially since the income statement is such an important statement in accounting. Look at the next question, E9. The first journal entry. Are you being asked to record a journal entry in E9?
Yeah. They say key accounts, but that leads to journal entries.
I'm glad you said that because it doesn't and it does. It's kind of like Danya's technically thing. Okay.
Okay.
So I'm happy. That's really cool, Danya. Yeah, I haven't heard it put that way before. All right. So here's why I'm glad you said that. When we say record each transaction in T account form, really you should not do a journal entry technically. See, that's the Danya thing. You should just analyze it and then post it directly to the T account or the ledger account. Remember, T account and ledger account are the same. In the real world, we don't say T account unless we actually trying to analyze a problem using T accounts. But the real name for T accounts is a general ledger account. Okay. So in this question, we should go directly to the T account and post the transaction. That's the technical side. The reason why I said it's a good point is because for some people and students, it is better and easier for them to do a journal entry first, even though a journal entry is not required, so they could see whether or not they're doing it correctly, and then post it to the T account. Does everybody get that?
I was listening, Jed. Can you say it one more time? Quick
Okay.
and fast.
It's twofold. The question wants you to put the answer directly to the ledger account. I'm saying for some people, it's easier for them to do a journal entry first and then put it to the ledger account. But you don't have to do a journal entry in this question, only if you need to do it to make it easier for you individually.
Okay.
Okay? Because a lot of people can't see in their mind the transaction to post it directly to the ledger account. They need to do a journal entry first, look at it, and then post it to the T account from their journal entry. Just depends on the individual.
Very true.
So what's the journal entry for A?
That would be, oh, you say journal entry, not ledger. Journal entry would be merchandise.
I was just gonna ask which one is, sorry for interrupting,
No, I want you to interrupt.
this is the perpetual inventory system, right?
Right?
So for clarification, under this has purchases and sale of merchandise. So we have to differentiate which is which then to use.
You mean for question A?
Yeah, no, like you're saying this heading says recording purchases, perpetual inventory system. I'm looking in the book under the system and it has examples of purchases of merchandise and sale of merchandise. We are to determine which one of the T accounts, I guess it's going to affect, or I guess it can do all. Like
Oh,
how
I
does it?
I see what
Okay.
you're saying. Yeah. Yeah, I'm glad you raised that again. Hang in there. Let's do 1 or 2, and then from E9, and then 1 or 2 from E10, and then we'll see what happens. Okay. So for A, what would be the journal entry for A?
That would be merchandise and credit. Merchandise. That would be
Credit.
What do we debit? What do we credit?
definitely accounts payable, as she said. You're gonna credit that for 2,500, and then you're gonna
Okay.
debit merchandise inventory for 2,500.
We forgetting something though. This NAC 30, this is a discounted item, right? Of what, 30% is this, Mr. Wilkinson?
Ah, boy, now
That's-
it's getting interesting. Does net 30 mean a discount or something else?
Well, that's saying they have 30
Want you
days
to
to
tell
pay it.
me.
Yeah, net 30 in this case. See, in another situation, it might be a discount situation. But in this case, it's saying you have 30 days in which to repay the $2,500. Okay?
Yeah.
So that's, yeah. So, no, I love it when you jump in and get it sorted out, because sometimes it is confusing, for sure. Sometimes even in the real world of people who are actually doing this, normally it gets a little confusing sometimes depending on what's happening. So yeah, in this case, it means you have 30 days to pay it back. So we debit purchases of
Merchandise.
okay? And we
And
credit
credit accounts
payable.
payable. Mhm.
Yes. All right. And remember, whenever we're purchasing goods on credit, we always have to credit which account?
Accounts payable.
Accounts payable. If we were purchasing it for cash, what would we do?
Credit cash.
Credit cash. Okay. All right. Does anybody remember what FOB shipping point is?
That means that I don't know what FOB mean.
Buy freight or
The book say free on board, but makes
Freight on
no
board, eh?
sense to
freight on board.
Yeah, freight or free.
Mhm.
Free, right? Free.
Yeah. Some people say free, some people say freight.
I think
Yeah.
freight makes more
Yeah.
sense.
Yeah.
I say freight.
Because it sure as hell not free. Okay. So by
Yes.
definition, what is that?
That
The
just means
buyer
that
pays for the cost in this case upon receiving the items.
Yeah,
Yeah.
the seller will pay only to take it to the dock.
Oh,
Exactly.
right,
Once it leaves the seller's dock, then the buyer has to pay.
right.
Okay. What situation occurs where the seller pays for everything, the whole shipping trip? What do we call that?
FOB destination.
Yes, FOB destination.
Destination,
The
right.
seller will pay the entire amount. Okay. All right. And again, some of these things are not only good for like passing exams and all that, they're good for normal life stuff because every now and then you might actually run into it, or somebody might be running into it, and you can help yourself or someone else. That's the beauty of some of these things. All right, one more entry. B,
Mm,
paid freight on the shipment in transaction A of $135. That's the FOB. You pay in
this
the
one,
Credit cash.
credit cash, yes. I like that. Whenever you hear pay, credit cash right away. First part of it is correct.
Your debit accounts payable.
no, I think your debit and shipping expense.
Now, be careful. The reason why we can't debit accounts payable is because that would mean you're reducing your credit that you got from the supplier.
Mm-hmm.
Remember,
Right.
you did not get any freight credit from the supplier, so you wouldn't debit accounts payable.
Okay.
What would you debit instead?
Shipping expense. Either shipping expense or freight in, one of them.
Yeah, freight in or
So
shipping
freight in or
expense.
shipping expense, yeah.
Yes.
So
yes,
freight in and shipping expense is the same thing?
Yes.
Oh,
Okay,
okay.
so freight in, okay.
So freight in, oh, okay.
Okay. Some people use freight in because freight in tells you exactly what occurred. Shipping expense could be a little more vague, like shipping expense for what? Freight in suggests more bringing in goods as opposed to shipping expense, which could be bringing in anything, perhaps. Okay. So whenever we see freight in, we normally attribute that to the shipping in of goods that have been purchased for resale. But shipping expense would work as well for any company. Okay, so we debit freight in or shipping expense, and we credit cash. Okay. All right. Let's do one more. H. Paid the amount owed on the purchase in transaction C.
You gotta go to C first, eh? Oh, no.
Oh,
He is.
well, yeah. Actually, you should go to C first.
Merchandise on credit.
Let's go to C then. Return part of the merchandise purchase in transaction C. 500.
So they have an initial amount of 1,400. Then they bring back 500, which leaves us with 900. So we paying them.
Okay, well, let's back up to C first then.
Yeah.
Purchase merchandise on credit, terms, blah, 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 $1,400. Is that the same as A?
Which includes
No.
freight paid
No.
by the supplier. No, that's something. No, oh, that's D. Sorry, I was reading something different. My bad. So C is merchandise on credit, right? Accounts payable and debit merchandise.
Yeah, it's the same as C, just a
Yes,
different amount.
same thing.
Now,
The
is
terms different.
are the shipping terms the same?
No.
No, that's what we were saying, no.
No, the shipping terms are different, but the
Right.
transaction is similar
It's-
to.
Right. A. It
Okay.
is.
So now we know that one. So let's go back down to our H then. Paid the amount owed on the purchase in transaction C. So transaction C was how much?
1,400.
1,400.
1,400. So we have to pay that. The first part of H, that pay that.
Cash credit
Cash credit
and debit accounts payable.
for how much?
For what is it paid to pay the amount owed in C, which is going to be the 1,400.
For the 1,400. So far, so good. But H has a curveball.
Yeah.
less
less
the
the
return in.
return in E, which is the
E.
500. So that's, so the,
So now, see, you see how systematic
900.
yeah,
and analytical
900.
accounting is. Now,
yeah,
yeah, you see, folks are beginning to get it now, so they're even doing mental math. Because once you start practicing, see, it's like anything else. If you don't practice it and actually go through it, you're like, man, what the hell? I should just shoot myself or leave this flicking class or whatever. But you don't have to do that. All you really need to do is go through the process.
Oh Lord, not
You see
tonight.
why you need to journal though? That's why. And
Yeah.
like,
Yeah, and remember, every transaction in accounting must have a what? Journal.
journal,
Even if the person
honestly.
don't, yeah, always. Because in the real world, some people might try to go from the transaction to the posting too.
Yeah,
Don't do it. Always journalize first, period, for a number of reasons. All right? Not the least of which is correctness and completeness. And it will make your life easier in terms of posting properly without making any mistakes. All right. So let's go to E. What happened in E?
The people that return some of the things they buy.
Yeah, how much?
$500 worth.
So what's the journal entry to record the return?
Return part of the merchandise purchased, not sold, purchased. So they decrease merchandise, and they're going to credit merchandise inventory
Right?
by 500 and
Right.
debit sales returned and not sales, purchase returns and allowances for 500 if that's an actual account.
Yes. Does anybody have any objections to that?
Okay.
Go back and say that again, Mario.
Mario said,
Okay. So,
I need to remember what you said.
so they
Oh goodness.
so they're gonna credit merchandise, and so they take in some of the stuff they bought back, which means they're losing some of the stuff, right? So they're gonna credit,
Not losing it.
Paid the amount
giving it
owed
away, giving it back.
on the purchase,
Yeah,
right?
we're giving it back.
Boom. So they're gonna credit merchandise inventory for $500, and then they're going to debit purchase returns and allowances for $500 as well.
Absolutely. So
Yeah.
now the balance from transaction C becomes what?
900.
Yeah.
$900. Anybody not see that? So you see, accounting is very systematic, very structured, very analytical. There are no half-done, half-baked programs. It has to be complete in every respect, okay? You have a transaction, you must do a journal. The journal must have a debit and a credit of the same amount. Once you finish your journal, then you must post it accordingly, and that's how it happens every single time, okay? Notice also, transactions and accounting cannot be done haphazardly. In other words, you should not post the 3rd of the month and then drop down to the 7th of the month and then go back to the 5th of the month. That does not work in accounting. The dates transactions are journalized and posted should be consecutive, one after the other, period. Okay? That way it alleviates all confusion. All right. So now that you have accounted for the discount, now you can pay the balance in H. And what is that? How do you pay it?
Gotta lose some cash. Not
Well,
lose some, but give away some.
yeah. Well, what do you debit and what do you credit?
You credit cash for $900 and you debit accounts payable for $900. Is it not paid though? Pay the amount owed on purchase. Yeah. Owed, which
That's
means
Less
like
the return in E,
which we already did.
right? You already did.
Yeah. Remember we did a journal entry for the return? After the
Mhm.
return, we left with $900.
So
do
say it again, Mario. Accounts payable.
You're gonna debit
You write
accounts
it
payable
down.
for $900, and then you're gonna credit cash for
Yeah,
$900.
900, right? Good.
Yes, absolutely. And that's what we do with every single purchase and every single purchase return. Once you understand the journal entries for those two sets, it never changes. That's the beauty of it.
This
Okay?
H tricky still low. This H is tricky because it would make you feel as if you have to go back to minus the amount in E. But it's just the wording of it. It's very tricky.
It could be until you get comfortable with it. Because
Yeah.
see, by the time you get to H, you should have done what?
Yeah, we
Oh.
were ready.
C and E.
Yeah, right.
Absolutely. And therefore, if you did those correctly, then you would have a balance of $900 to pay.
Right. And
Absolutely.
it's still balanced, equal up to the 14 in any event.
Correct. Correct. Okay. All right. Let's see if there's anything on the sales side. They give us something that's all mumbled, jumbled. Let me see. Okay, so that's the purchase side of things. I'm hunting around for something on the sales side of things. And they don't seem to be, okay, here we go. Problem 2. Vago company engaged the following transactions for blah, blah, blah. August the 7th. What's the journal entry for that sale?
Four different accounts, no, that's for sure. Four
That's
different,
interesting.
and the first two are crediting sales for, actually, no, hold on, pause. Sold merchandise on credit. Sold merchandise.
Now, let me just tell
You
guys-
credit it.
let me just tell you guys something. You see this process you're going through, like mentally trying to analyze the thing. This, believe it or not, this is what real accounting people do every day.
Why do people want to go through this?
Because,
What sense this make?
because
You guessing. Why? For a living? Really?
it's an essential service and they get paid big bucks for it, actually. Okay, I mean, I think those are two of the first reasons.
So come them statements could be wrong at any point, ma'am, any level.
Of course, no, you're right. They could be wrong at any level.
And they get, you know what? They getting paid to guess. I need to look into this.
Well, look at it this way. No, they're not guessing. Sometimes they can make errors and overlook things and that kind of stuff. Or sometimes somebody who is not properly trained could be left alone to do it. See? That kind of stuff. Just like when you go under the surgeon's knife and then they forget and leave a part inside and sew you up.
Okay, I guess they're humans.
No, crap happens. Okay? Even
Okay.
under the scalpel. You don't want any crap happening on the scalpel, but it does.
Definitely not.
Okay. All right. So, first of all, is this a perpetual system or periodic?
It is a perpetual.
Perpetual.
Then, if it's a perpetual, the next thing you must remember is that under a perpetual system, you have to make a journal entry for the sales amount and the cost of goods.
Yeah.
Under the periodic system, you only make an entry for the sales amount because cost of goods will not be determined until end of the year when we do
Okay.
inventory. Sorry, rules are the rules. Just like if you're going to learn how to do parallel parking, there are certain rules that will help you to do it well. And if you don't follow those rules, dog eat your lunch. Same thing. So man, I'm not studying the rules, then you won't get your license or you'll be ripping people's cars up all the time. It's like that. So under the perpetual system, we need two entries, a sales entry and a cost of goods entry. If it's periodic, you only process the sales entry. The cost of goods will not be done until the period is over at the end of the year, following inventory. All right. So now that you know that for sure, what journal entry do we make for August the 7th?
Gonna do debit accounts receivable for 3,000 buckaroos, and we're gonna credit merchandise. I like credit sales for 3,000 buckaroos, and then because it's a perpetual inventory system, and you have to record how much cost of goods was sold and all that blah blah blah, we are going to debit cost of goods sold for 1,800 and credit merchandise inventory for 1,800.
Absolutely.
All right, go to the front of the class.
Yeah,
All the way to the front.
definitely.
That's where you was sitting in the exam anyway.
You can repeat that again, please,
With the
sorry.
exam class, with the grades for that.
I was hoping nobody would say
I know
exam.
you was open. I heard you from the break. I couldn't help but ask this. Mario right now to the front. Let's see what these grades looking like.
No man,
Mr. Wilkinson, I was looking for an email.
Dog, I'm sure that's the questions. I know.
When I now don't get me wrong, folks, from what I can see, folks did generally okay. I can't say what your final grade is yet because I keep getting stuck running off with some other nonsense, keep getting in my way. But in a way, I was happy that I got interrupted because sometimes when students get grades too early, they like start to panic unnecessarily. And I'm like, stop panicking. This is only one exam and you're only in the middle of the semester. I've had students who have had, once they got their grade, if it wasn't what they thought, they've had panic attacks. They stop the class. They like, I don't know, go to church, talk to the pastor, whatever it is folks do, but no need to do that. Okay? You just keep on keeping
I
on.
sound too good, folks.
It's affecting our finals.
So in that case, can we just have finals on chapter 1 to 6?
Motion. Vote.
Denise, she was a character.
Give her all the points in the room.
I mean, in sense, these grades don't matter, and we shouldn't let it stress us out. Like can we just not have it on chapter 1 to 6?
Give her all the points in the
Remember, they do matter, but I don't want you to stress about it unnecessarily because
Yeah,
I've
but
seen
that
so
we will
many
be long.
crazy. I know.
Yeah, that's our final. That's
I need to know my
some of
grade.
us
I
who
have to know
working
my
that
grade.
going
So I
on
know
our
how to
files.
Some of us gotta pay them back.
Pay them back, exactly. That's
Just remember
money.
now. Just remember, the grade is the byproduct. The most important thing has already happened. It's like having a baby.
I know nothing but that.
I know. The important thing is
Mario.
the important thing is you have already done it, and no matter what the result is, there's nothing else you can do to undone it. So don't worry about it. That doesn't mean it's not coming. It's coming sooner than you think. I just don't want you guys to get too preoccupied with it. Then you start messing up your next grade, worrying about the first one.
No, we ain't gonna do that.
Okay, as
As
long as you
long as
don't
it come
do
before
that.
finals.
Oh, definitely.
Right, I
I
thought
just
you were for the
stick
day.
with the same format, Mr. Wilkinson. Don't try trick us because we
I need
already
to see
get
where
that,
I am. I need to know
that
where
little
you
piece
can
of threat. We ready.
No, it's going to be the same format as the first. The only key difference is going to be how well you prepare for the second part of the examination, chapters 6 through 10. Okay? That's gonna
Okay,
be
so we won't have chapter 1 to 6, just 6 to 10.
No, it's not going to be cumulative. Okay,
Awesome.
your first exam is on 1 to 5. Your next one is going to be from 6 to 10.
We got this. Yeah,
Okay?
we got this.
That's it.
We got this, y'all.
Alright.
We got this.
So that's kind of a hint. You know what you have to do. All right. Okay. So that those two journal entries are required for perpetual inventory systems. One more question for August the 7th. The difference between 3,000 and 1,800 is what?
1,200.
What does that represent
Mhm.
in accounting?
It's that thing where it's like you have a certain amount of days to
That's
pay
the
it back.
profit.
That's your what? Somebody said it.
Profit.
Yes. Why did you say that?
Because if you look at it, that's like the cost of the goods. That means that's what you spend, and that's what you sold it for. So when you minus your 1,200 profit.
Thank you very much. I noticed she didn't use any big time accounting skills. Just what?
No,
Common sense. She said, if I'm
I'm a
selling it for
sales lady, so I
3,000
know.
and there you go. Okay. Absolutely. So the difference represents the profit margin for the company. All right. Okay. Way to go. Way to go. August the 8th. What journal entry will we make for that? August the 8th.
Let's go, Mario.
Oh, I was giving somebody else a chance.
No, last week Monday I was in New Orleans, so I can be honest, let me confess. I didn't look at chapter 6.
Oh,
I
good.
was in the class, but I was in New Orleans on
You were
Bourbon
in New
Street.
Orleans. Stop the
On Bourbon
madness.
Street when y'all was in class. Sorry.
Good.
Some people have all the luck on Bourbon
So,
Street, no less.
yeah, so I notice I always talking, but I just following and trying to catch up.
So how was that life on Bourbon Street last week?
Man, it was awesome.
Same as usual?
Yeah, same as usual. Very liberal.
Street dancing and all the bright
Everything you
lights
could
and all
think
that
of.
stuff?
Mm-hmm.
Wow.
Yeah.
You got
Okay.
any beads?
No. No, I ain't got no beads. But it's good, man. Y'all need to visit New Orleans if you haven't already. The food is awesome. Everything is awesome.
Wow. Yeah, I've been procrastinating.
Yeah, I was on
About going to
vacation.
New Orleans.
I
Okay.
got my bag snatched too from me.
I was about to ask you if they're still running off with your stuff.
Yeah, but I got it back because I ran behind the person and they ended up slipping and it was just gone.
You've got to, you mean all that crap happened since I heard from you last? I can't believe it. This is total madness. As a matter of fact,
Yeah,
that's one of the reasons why I haven't rushed down to, I've been all over the place around the world, but I've not rushed down to New Orleans, and that's one of the reasons.
yeah, they snatch it back.
They do some weird stuff down there.
Yeah, they do. They do, but it's
Yeah, they do.
really cultural and it's really nice. One of my favorite spots thus far.
Yeah,
I'll definitely
but it's
return.
like being in Rio de Janeiro, Brazil. It could get spooky despite all the fun and
Yes.
frolic.
Yeah,
Okay,
it's really
don't find
nice.
yourself in the wrong place at the wrong time with the wrong people doing the wrong thing.
Yeah.
You may not necessarily survive it. Okay, I know because I visited Brazil, but I went to Sao Paulo, the city. I didn't go anywhere near Rio. I don't want anybody in Rio to even see me because they do all kinds of weird stuff in Rio de Janeiro. Okay, like so many other major cities that have those strange things going on. All right. So what's the journal entry for 8? August the 8th.
Inventory is increased by 6,000. Inventory is debited by 6,000 and accounts payable is credited by 6,000.
Absolutely. One more for the transaction and then we move on.
Yeah,
August
that's
the 17th.
definitely somebody else one.
August the 17th. What's the journal entry?
Hold on, check. I remember studying no check. Oh, that's the payment.
That's a good. Is it handled like cash? Because check, you can't really count a check until it's cleared, eh?
No, you can treat it as cash.
Yeah,
You can treat it as cash.
Yeah.
Of course,
Okay,
you don't have
so-
to wait until it's cleared.
Pardon?
You don't have to wait until it's cleared to treat it as cash. Once you get a check, it is deemed to be cash until it bounces.
Yeah.
Okay, so you would debit cash
Okay, for how much?
for what we is on,
You gotta
what
go
we
on.
doing 17, right?
Yes,
Yeah, but she needs to see all
Purchase
the-
on the 7th. Oh, 3,000.
yeah,
That's what
3,000.
it was sold for.
Mhm.
Uh-huh.
And purchase. Oh, and accounts receivable goes down,
So what do we do?
Credit it.
credited
Credit accounts receivable for how much?
3,000.
$3,000. Thank you very much. Okay. I feel a little better that you guys are beginning to get the hang of this crazy debit credit analytical processing of transactions and understanding that in accounting, transactions must follow a date order. Transactions must be analyzed correctly. Transactions must always be journalized first. And then once you come up with your correct journal entries, then you may proceed to post. Okay, for sure. All right, now I can go to chapter 7, which is where we're going to next. Just thought I'd rake you over the coals a little bit.
What is a bounced check?
Somebody tell me what a bounce check is?
That's a return check. A check, no good.
So that mean like that mean they don't have funds?
Correct. I
Yeah,
write you a check for 500 and I know I ain't got 500 in that check in the bank.
Exactly.
So like a bounce check is like decline then.
Correct.
Automatically.
Non-sufficient funds.
Yeah, and you get charged for
Yeah.
that, the insufficient funds on your account too.
They
Mhm.
charge you because you don't have money. That is
Of
very
course,
cool.
that's, yes, just like
That's
how,
a
yeah.
transaction, yeah.
Oh,
well,
man.
you might be happy to know that writing bounce checks in many countries of the world is a
Against the
criminal
law.
offense.
Exactly.
Wow.
And why?
And it's supposed to be a criminal offense here too, but certain things we don't enforce. Okay?
What is they're locking
But-
up the people to stand up the funds? Come on, man.
People write checks all the time to get you off their back, knowing they don't have the money. But they
Yep.
know by the time you deposit it and it clears 3 days later and says that they don't have the money, that they'll be long gone, you can't find them anymore, or it gives them time to find the money, depending on who it is. Okay? So yeah, that's what a bounced check is. It's a return check that has no money on the account of the drawer. And people sometimes know that they don't have any money, or they know they don't have sufficient, but just to get you off their backs, they'll give you a bad check. That's what we call it. And by the time you find out there's no money on the account, the bank says refer it to the drawer. There's no money. Then you have to run them down and try and get the money again. Okay, for sure. All right. Now, we are talking in chapter 7 about a very important aspect of business in general and accounting in particular. It's called internal controls. And it's one of the primary ways that companies try to get employees, especially from stealing company assets, particularly cash. Without proper internal controls, staff members and others will be carting off food, cash, computers, anything they could run off with, toilet paper, hand towel, whatever they could, pencils, pens, the whole 9 yards, you'll cut them off. So these internal controls are designed to protect the assets of the firm, whatever they might be, whether they're inexpensive or whether they're costly. Okay? People are always looking to do something interesting. All right, so let's see who's going to open up our discussion on internal controls. Okay, Danya, I picked you out of the middle because technically you're not here.
Wow.
Just teasing that technically. That's really cool. All right. The need for internal control. Let's go to the very beginning. Internal control. Let's start there.
Okay, okay, so internal control is a process designed by a company to establish the, hello?
Yeah, we're here.
Okay, to establish the reliability of the accounting records and financial statements in accordance with generally accepted accounting principles, and to ensure that the company's assets are protected. Management must assess its need for internal controls, establish its responsibility for them, and engage auditors of them if required.
Mhm.
The need for internal controls. Buying and selling the principal transactions of merchandising businesses involve assets, cash, accounts receivable, and merchandise inventory that are vulnerable to theft and embezzlement. Cash and inventory can, of course, be fairly easy to steal. The potential for embezzlement exists because of the large number of transactions that are usually involved in a merchandising business. For example, cash receipts, receipts on accounts, payment for purchases, and receipts and shipment of inventory. These make monitoring the account records difficult. If a merchandising company does not take steps to protect its assets, it can suffer high losses of both cash and inventory. Management's responsibility is to establish an environment, accounting systems, and internal control procedures that will protect the company's assets. A company's merchandise inventory includes all goods intended for sales, regardless of where they are located: on shelves, in storerooms, in warehouses, or in trucks between warehouses and stores. It also includes goods in transit from suppliers if the title to the goods has passed to the merchandiser. Ending inventory does not include merchandise that a company has sold but not yet delivered to customers, nor does it include goods that cannot sell because they are damaged or obsolete. If damaged or obsolete goods can be sold at a reduced price, however, they should be included in ending inventory at their reduced value. Merchandisers usually take a physical inventory of the close of business on the last day of their fiscal year. This process involves an actual count of all merchandise on hand. It can be difficult to task because it is easy to accidentally omit items or count them twice. A physical inventory must be taken under both the periodic and perpetual inventory systems. To facilitate the process, merchandisers often end the fiscal year in a slow season where inventories are relatively low levels. For example, many department stores end their fiscal year in January or February, after hours at night, on a weekend, or when the store closes for all or part of the day for taking inventory. Employees count all items and record the results on numbered inventory tickets or sheets, following procedures to ensure that no item will be missed. Using barcoding to take inventory electronically has greatly facilitated the process in many companies. Most companies experience loss of merchandise inventory from spoilage, shoplifting, and theft by employees. When such losses occur, the periodic inventory system provides no means of identifying them because the costs are automatically included in the cost of goods sold. For example, suppose a company has lost $1,250 in stolen merchandise during an accounting period. When the physical inventory is taken, the missing items are not in stock, so they cannot be counted. Because the ending inventory does not contain these items, the amount subtracted from the goods available for sale is less than it would be if the goods were in stock. The cost of goods sold then is overstated by 1,200. In a sense, the cost of goods is inflated by the amount of merchandise that has been lost. The perpetual inventory system makes it easier to identify such losses. Because the merchandise inventory account is continuously updated for sales, purchases, and returns, the loss will show up as the difference between the inventory records and the physical inventory taken at the end of the accounting period. Continue, yeah. Once the amount
Well-
of the loss has been identified, the ending inventory is updated by crediting the merchandise inventory account. The offsetting debit is usually an increase in the cost of goods sold because the loss is considered a cost that is reduced, that reduces the company's gross margin.
Okay, thank you very much, Danya. Fantastic for introducing us to all of the intricacies of why we have internal controls in the first place. As you can see, merchandising operations are open to all kinds of scams, losses, theft, embezzlement, misuse and abuse of cash, and other assets of the company, no matter what it is. And so the management is always seeking ways to try to protect its assets. The other thing is determining loss of merchandise on the periodic system. It gets tricky because you don't find out anything about it until the end of the year. And so it's hard to kind of determine what really happened as opposed to the perpetual system where you keep an up-to-date record each time a transaction occurs. So you can always, when you do your count, determine what should and shouldn't be there according to the record. Okay? But that's just something that management fight with from time to time. Because no matter how hard we try, people find a way sometimes to get around it. What we try to do in most businesses is to simply minimize the amount of these things that can happen by tightening what we call our internal controls. Okay? And of course, who is responsible for internal controls? Management first. They must make sure they put all the things in place to protect the company's assets and then follow up on them in the event that something is going wrong to try to correct the situation. Okay? For sure. This point about the independent accountant and the audit of the internal control of the company, this is here simply to remind you that the company's internal control system should always be reviewed by somebody who understands what it's about, what it should be, and usually that is the accountant. The reason why we refer to the accountant here as independent is because typically this is someone from an auditing firm who's coming in to do this review. Remember, if you work for the company, then you are not independent because you work for the company. If you do not work for the company as is an auditor, then you are independent, and therefore, when you come in as an auditor, it's expected that whatever you find, your feelings and your commitments and all this stuff will not deter you from making the right decision about what's going on in a particular company. A lot of companies have terrible internal control systems, and they have auditors who don't always tell the truth. Okay? It's unfortunate when an auditor decides to be dishonest or unethical, but sometimes they do. Okay? But let's consider them to be the exceptions and not the rule. So what are the components of the internal control system? A couple of things. First of all, we have what we call the control environment. Okay? And this environment is created by management in order to create the awareness for staff that we will not tolerate anything other than what is ethical and correct in this organization. And so pretty much the control environment is established and measured and responded to by the company's senior management, including the board of directors and the CEO and his or her team as well. The second component of internal controls is what we call the risk assessment side of things. And of course, risk assessment involves looking at those areas in the firm that creates the greatest risk to the company, whether it's the accounting system, the warehousing system, or whatever the case might be, and then taking steps to correct those risks. Wherever the greater risk exists, then the greater energy must be taken to resolve it as quickly as possible. Okay. Information and communication, again, of course, is very important, making sure that what comes out, garbage in, garbage out, we don't want that. So we want to make sure wherever possible that information and communication processes are clean and correct and ethical, such that once that information goes out there, that persons who are hearing it and who are using it can in fact rely on it. Okay? Absolutely crucial internal control issues. Number 4, control activities. These have to do with policies and procedures within the firm so that everybody knows how things should go. It gives the basic directives of the company, what the company believes should be done. And so this control measure is designed to present this information to everyone in the company, such that nobody will have the excuse that they did not know what the control environmental activities were supposed to be. And then last but not least, of course, is a crucial part of the internal control process, and that is called monitoring. Going back to check the things to see if things are going as planned. That's all monitoring is. Going back to see if things are going according to plan. All right. So let's see who's next on my hit list. Vanessa, are you still there?
I'm here. What page are we on, please?
You can read it off my screen so we all can be on the same page, because I know you guys.
I tried. I can't find my glasses, but I'll try.
You know, I feel so much better that somebody needs their glasses. All right.
It's
So
on page 303 in the book.
Page 303 in the book.
Okay,
Yeah.
read it off the screen. Probably a
Okay.
little easier. Control activities are a very important way of implementing internal control. The goal of these activities is to safeguard a company's assets and to ensure reliability of its of its accounting records. Control activities include the following. Authorization. Authorization means the approval of certain transactions and activities. In a retail store, for example, cashiers customarily authorize cash sales, but other transactions, such as issuing a refund, may require a manager's approval.
For example, you guys will notice if you go to a fast food joint like Wendy's or McDonald's and the cashier makes a mistake, what do they normally say?
They need their manager.
To get the
Yeah.
manager to take it
I
off.
need manager, I need authorization. There's an authorization.
Yeah.
A second person comes and actually clears the machine and or gives a refund if necessary. And there's a reason for that. Anybody knows why? It's called authorization. A second party authorizes the refund or the clearing of an order. Why?
Because if the cashier doing it all the time, they may
Got
be
more
getting
control.
paid. Probably from your mom.
Therefore, unauthorized.
I'm thinking about it from the. Oh, sorry, go ahead.
Well, just think about it this way. If, let's say, the same person who collects the money from the customer makes a deposit in the bank, what's the danger there from a control perspective?
They know how much money to put in.
Not only how much money to put in, what else?
They may not put it in.
No, they may not put all in. They may put some in and then keep some.
Yeah.
And if nobody's watching, who's going to be the wiser?
Yeah.
Okay. So usually the person who collects money, like the cashier, should never write up the deposit for the bank. Ever.
Well, they write up that deposit, it's just someone verifying.
Well, that's fine if somebody verifies it. That's always okay. That's part of the.
Because we have a lot of controls where I work, a whole lot. I sign all day. My fingertips are sore.
Absolutely. And now,
Yeah.
you know why. Here's the formal reason. It's a control activity. It's very important for auditors when they come in to know that the controls are tight. And
Yeah.
history has shown that even under tight controls, people still get away with some things every now and then, but to a far lesser
Yeah.
extent.
Because to avoid a receipt, they would need an override, stuff like that.
Absolutely. And the person who is involved in the process never does the override because they can manipulate the system
Exactly.
under those
Yeah, they
conditions.
can't do their own overrides.
Hell no. Just like the cashier should not do his or her own deposit
Right.
by no stretch of the imagination. Okay, who's reading?
Vanessa.
Yeah, sorry, Vanessa. Keep going.
Right. Recording transactions. To establish accountability for assets, all transactions should be recorded. For example, if a retail store uses a cash register that records sales, refunds, and other transactions on a paper tape or computer disk, the cashier can be held accountable for the cash received and the merchandise removed during his or her shift.
Now, stick a pin. I'm sure you're all familiar with that as well. Okay. That is it. That's why we have cash registers practically everywhere you go. They're not just there because they look fancy and they make cashing easier. Those are two alternative reasons. But the key reasons are what you've just seen here in the recording process. Okay. And once everything is in there on the tape, if the cash is short, the cashier has to give an account. They have to say why. Sometimes they might not always know why. They might overpay a customer and not realize it. But hey, crap happens. The whole point is you have to give an account. Whether anybody believes you or not is a whole other problem. All right. Before you go on, Vanessa, I want you to read. Do you guys have a focus on business practice in your book?
Focus on business practice.
Do they have that in your
No,
new
we
book?
don't have those.
That's
No.
a shame because Vanessa, I want you to read this focus about frauds. Okay, which
Okay.
frauds are most common? Please
Okay.
read that for your colleagues.
Okay. Which frauds are most common? A survey of 5,000 large US businesses disclosed that 36% suffered losses in excess of 1 million, up from 21% in 1998 due to fraud or inventory theft. The frauds most commonly cited were credit card fraud, check fraud, false invoices, and phantom vendors, and expense account abuse. The most common reason for the occurrence of these frauds were poor internal control, management override of internal controls, and collision. The most common methods of detecting them were notification by an employee, internal controls, internal auditor review, notification by a customer, and accidental discovery.
Accidentally, keep going.
Companies that are successful in preventing fraud have a good system of internal control, a formal code of ethics, and a program to monitor compliance that includes a system for reporting incidents of fraud. These companies routinely communicate the existence of the program to their employees.
Indeed. Now, whether you guys are aware of it or not, perhaps I'm sure some of you are actually working in the environment. Somebody mentioned I'm tired signing off stuff all day, overriding. We
Yeah, I
try
have
to
another
put
question
everything
too.
right there. Question, yes.
This expense account abuse, oh boy.
Oh boy.
Yeah, elaborate on that for me because we have an expense account and I just want to put that in perspective a little bit better.
Yeah. The problem with expense accounts is
Mhm,
that if you're not monitoring them and checking them regularly, first
mhm.
of all, people can manipulate them and use it as their own personal account. By that I mean they could, if they need some money today, they'll just take some out and then put it back later, and then take some out, like petty cash. They do petty cash and then put some back, and all this kind of stuff, and pretty much abuse the account for purposes other than the business itself. Because remember, it is not good enough to say that you put the money back. The truth of the matter is you are not to take it out at all for personal use. That's really the point. Company money should only be used for company purposes, even if you pay it back. And so if you remove it and there's an audit or check or cash count and they discover that it's short and you use the money for some reason, your argument that you always put it back and plan to put it back again will not hold. Unless, of course, the person in charge is your boy, as we say here in the Bahamas. Okay. And so, yeah, that's one definite way to abuse the expense account. Another way to abuse the expense account is to spend money on stuff personally, for example, and then call it something else to make it sound like a business expense, like business lunch, business supplies and stationery, whatever the case might be. See my point? That's another form of expense account abuse. Or simply going off somewhere and overspending, splurging, paying unreasonable amounts could be considered expense account abuse as well. Does that help?
Yes.
Sir, it helps a lot. Thank you so much.
Absolutely, absolutely. And people do all of those things all the time. Plus some other things you'd be surprised to discover, because I'll tell you, when it comes to expense amounts, petty cash and money, it does strange things to some people. It's like all they try, they cannot overcome the urge to do it,
Yeah.
unfortunately. Despite the known consequences, somehow these persons remain driven to do it. My. All right, keep going, Vanessa.
Documents and records. Well-designed documents help ensure that hold on, you go now.
Sorry.
Well-designed documents help ensure that transactions are properly recorded. For example, using pre-numbered invoices and other documents is a way of ensuring that all transactions are recorded. Physical controls. Physical controls are controls that limit access to assets. For example, in a retail store, only the person responsible for the cash register should have access to it. Other employees should not be able to open that cash drawer when the cashier is not present. Similarly, only authorized personnel should have access to warehouses and storerooms. Access to accounting records, including those stored in company computers, should also be controlled. Periodic independent verification. Periodic independent verification means that someone other than the person responsible for the accounting records and assets should periodically check the records against the assets. For example, at the end of each shift or day in a retail store, the owner or manager should count the cash in the cash drawer and compare the amount with the amount recorded on the tape or computer disk in the cash register. Other examples of independent verification are periodic counts of physical inventory and reconciliation of monthly bank statements.
My.
Separation.
Sorry, before you go on, Vanessa, has anybody in this room ever done a bank reconciliation? No? Well, does anybody know what a bank reconciliation is? Yeah, it is only common among those who actually mess with
Yeah,
it.
bank recs, deal with them all the time.
Oh, you do bank recs as well?
Well, that's a part of I'm new in my role, but yeah, that's a part of my role as well.
Indeed. Do you do it manually or electronically?
I think I manage a team of 40 persons. So I think we still are doing a lot of stuff manually.
Manually, yes,
Yeah.
indeed. You're not alone, okay? Of course, QuickBooks, for example, once you set all that nonsense up, not nonsense, you know what I mean, stuff up, it allows you to do reconciliations electronically as well, for the most part. So that's an option, but a lot of firms are still doing it manually. And essentially, what does the reconciliation process do? When we're reconciling, what are we doing?
Balancing.
Okay, getting warm, balancing what? What do you actually, why are you messing with that in the first place?
Are you messing with the bank recs?
Absolutely. Why are you doing it?
Well, I guess you have the, well, with us, what we do is the money that comes into the company, whether it's through the bank, whether it's actual cash, but mostly because we have a back office premium processing, and what they do is they handle all bank recs. So they
Right.
balance, they ensure that all monies that come in are
Right,
posted into our administrative system.
right.
So they balance that back to whatever funds we receive.
And then deposit it in the bank.
Correct. Well, the money is directly deposited into the bank.
Yeah.
So we do it from two angles, actual cash coming in for that day from actual customers. And then we have the customers that sends money directly into the bank.
Correct. So the cash that comes in, that is physically deposited to the bank in the old fashioned way.
Correct.
Yeah. And typically that is done either the same day through a night shoot or early in the day or the following morning, sometime first thing. Deposits. And again, the fact that you count it and verify it and all that stuff, and I'm sure you have to do that on a daily basis.
Yeah, we
Nobody-
send monies
yeah.
every day.
Yeah, nobody moves, nobody gets hurt, nobody goes home until the money is turned in. In the old days, when I was a youngster, and the insurance person used to come to your house, believe it or not, they would visit your home to collect premiums. That's what children learn how to say, "Mommy say she ain't home." Okay? Because mommy doesn't have any premium money to pay, they tell the child, to tell the insurance person they're not home. But insurance people used to actually physically come house to house to collect premiums and then take it back to the office where it is reconciled pretty much the same way that we do presently for those cash transactions. Okay? So yeah, the point that you do it every day is a control measure. If you try and mess with that every 3 days, people are going to start running off with money the first day and the next day and try and put it back. Or some other interesting thing is going to happen. All right. So the fact that you do it daily, that in itself is a control measure. The fact that you move the cash quickly to the bank account is another control measure. Because if you keep cash hanging around too long,
Yeah.
people start getting a little antsy for some reason.
Mhm.
And they start getting creative. And then strange things happen, and then suddenly something disappears. Okay. Yeah. So yeah, those are all signs then of control measures, especially to protect cash, physical cash, coming through the organization. All right, keep going.
Separation of duties. Separation of duties means that no one person should.
Sorry, Vanessa. One other thing I wanted to say before you go on with these control measures. The bank rec is designed to bring the company's cash account or ledger in balance with the bank statement balance or vice versa. In other words, because of timing differences, the cash balance in the company account, cash account, is always going to be different from the bank statement's balance. And so the bank reconciliation typically should be once a month, preferably. For some companies, more often every 2 weeks or something, maybe in some cases every week. But the whole idea is to bring both accounts, the company account cash and the bank statement balance, the bank balance into balance, where once the reconciliations are done, they are both in agreement. That way, if something goes missing, you can investigate it. If something is sitting on your bank statement that you don't recognize, you can find out about it and all this kind of good stuff. Okay. So basically, if the bank balance is 3,000, the company account balance is cash balance is 2,000. When the bank rec is done, the balances should eventually be the same. If they're not, something is wrong. Okay, somewhere. All right, keep going.
Separation of duties. Separation of duties means that no one person should authorize transactions, handle assets, or keep records of assets. For example, in a well-managed electronics store, each employee oversees only a single part of a transaction. A sales employee takes the order and creates an invoice. Another employee receives the customer's cash or credit card payment and issues a receipt. Once the customer has a receipt, and only then, a third employee obtains the item from the warehouse and gives it to the customer. A person in the accounting department subsequently compares all sales recorded on the tape or disc in the cash register with the sales invoices and updates the inventory in the accounting records. The separation of duty means that a mistake, careless or not, cannot be made without being seen by at least one other person. Sound.
So of course, let's not forget the word somebody used earlier, that C word. It's called collusion. Anybody knows what collusion is? What is
It's when you team up
collusion?
to do fool.
Sorry?
It's when you team up to do fool.
Yeah. Couldn't put it better myself. You team up to do fool. Okay? Two or more people getting together to plan and maliciously go through the process of defrauding or otherwise removing assets from the company. Okay? Collusion is sometimes hard to detect, especially if two people are involved, but sometimes too, it has some benefits because if something happens to the two people, somebody will talk on the other person and say, so if you're colluding with anybody, don't get them mad. They might turn you in, even if they turn themselves in. All right, keep going.
Sound personal practices. Personal practices that promote internal control include adequate supervision, rotation of key people, rotation of key people among different jobs, insistence that employees take vacations, and bonding of personnel who handle cash or inventory.
Take a pen again, Vanessa.
Okay,
Uh,
give me 1 second. Let me find my glasses right back.
no problem. I feel better already. I'm not the only blind Bartimaeus. Okay. This thing about insisting employees take vacation, why is that a control measure, anyone?
So they don't get too comfortable in their role.
Meaning?
They don't get too confident in the fact that they're moving no time soon to conceptualize a scheme.
They don't catch up with the mess they're doing.
You don't want,
That's
yeah,
right.
you don't mind people being great at their work. The only problem is some people, when they be in a particular area too long, they start coming up with, somebody said it, schemes.
Yeah.
They start learning the area so well, they learn all the loopholes, all the ins and outs, all the people's behavior, who's absent, who's present, what time everybody goes to lunch, what time they come back, who smiles halfway, who frowns halfway. They learn everything about the environment. And then when they've learned everything, who they could take something to sign, and they know that person doesn't look at the details, so they can write a check and take it to the person to sign, payable to them. And since the person is always talking and signing, looking and signing, doing everything except reviewing the check and signing, they can actually authorize the check, not even knowing that they authorize it to the person, staff member who brought it to them. Okay. But the point is, if you have a staff member who every year tells you they don't need any vacation,
Something wrong with that.
something could be wrong. Okay, I'm not saying something is wrong, but
I'm saying
any astute person, auditor, supervisor, staff member, or other person would presume that year after year you don't need to take vacation, that something is inherently wrong.
They don't want you to see and have to
No.
follow behind them because you can figure out what they're doing.
Exactly.
Yeah.
All right. And that's one of the reasons
Big
why,
red flag.
yeah, you send people on vacation just to make sure that somebody else is looking at it,
Yeah.
just in case. We're not accusing anyone. We're not saying anybody's doing anything. We're just saying it's designed to keep everybody honest.
That is smooth. That is
Yeah.
very smooth.
Okay? Absolutely. Because a lot of times, the more comfortable we get, the more familiar we get, the more conniving we become, and we start planning all kinds of crazy things. Okay, for sure. All right, keep going.
Bonding. Bonding is the process of carefully checking an employee's background and ensuring the company against theft by that person. Bonding does not guarantee against theft, but it does prevent or reduce loss if theft occurs. Prudent personnel practices help ensure that employees know their jobs, are honest, and will find it difficult to carry out and conceal embezzlement over time.
Anybody knows what embezzlement is?
Stealing money.
Yeah, usually by way of
Ooh,
employment.
ooh. That's like when they be sending the money to the Cayman Islands and stuff.
Well,
That's money laundering.
it could be money laundering. It could be the proceeds of embezzlement as well. Okay, because remember, once you wire transfer stuff, it could be the result of all kinds of things: money laundering, embezzlement, fraud, trafficking, the whole 9 yards. Any illegal activity that you earn money from, you can then take that money and wire transfer it anywhere in the world to hide it. Of course. Okay, for sure, for sure. All right. And so bonding is designed to protect the company against theft by any particular employee. So basically, the bonding insurance or cover is designed to cover all employees, because we can't really say who's going to run off with the cheese until the cheese is gone and we see some identifying issues to say who it is. And sometimes some rats are so shrewd you can't even tell which rat it
Yes.
is. Yes, yes. All right. So, but there are some limitations on the internal controls. Okay, Vanessa. So why don't you just finish up on those limitations so we could see what they are?
No system of internal control is without weaknesses. As long as people perform control procedures, an internal control system will be vulnerable to human error. Errors can arise from misunderstandings, mistakes in judgment, carelessness, distraction, or fatigue. And separation of duties can be defeated through collision by employees who secretly agree to deceive a company.
Secretly agree. Yes. Doggone it. You'd be surprised who's secretly agreeing to do something tomorrow somewhere.
What?
So somebody's always planning something somewhere for some reason or another. Okay, keep going.
In addition, established procedures may be ineffective against employees' errors or dishonesty, and controls that are initially effective may become ineffective when conditions change. In some cases, the cost of establishing and maintaining elaborate control systems may exceed the benefit. In a small business, for example, active involvement by the owner can be a practical substitute for the separation of some duties.
Indeed, in a small business. If you guys notice, for example, when you go into a store that is run by, let's say, Asians, do you notice like they spend a lot of time near the cash register? Anybody ever notice that?
Not really.
No?
Yep. Olem Buddha.
Say it again.
Olem Buddha.
Oh, so those of you who have not noticed it, you're out in left field or you're dead and you don't know you're dead. Sorry.
Well, I get not.
That's just an expression for you should have seen it. Yeah, they're always watching the cash register. Even oftentimes they're not cashing, but even if they're not cashing, they are nearby watching all day. I don't know when they go to lunch, I guess they substitute all day because they're watching the cash. and probably watching other stuff too without giving off that they're watching the whole store for that matter. Trying to prevent all these things. It's a kind of internal control. It's called the watch, I call it. Okay. So one of the things she said also is that an internal control that starts off strong could end up weakened. And there are a lot of reasons why that can happen, but typically it could be where two persons start off as just two employees who are verifying night deposits. So they work together for a while, and then after a while they grow fond of each other. See, fond. So before they grew fond of each other, and of course this can be male, female, 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 male, male, and the fondness does not have to be any kind of romanticism either. You can just see that they became friends, fond of each other. As long as they're not fond of each other, they go through the rules, check the stuff correctly, verify the money, sign off. Unfortunately, if they work together long enough in many organizations and they grow fond of each other, they start relaxing their roles. Suddenly, they're not watching each other so much. One is counting, the other one is eating. One is saying, and so they relax the controls because they are comfortable with each other. And then, if they really, really get comfortable with each other, then they start having discussions about collusion. Suppose we were to consider doing this together, see? And then they start really becoming creative. But notice where it began, with strong controls. Two people just come together and says, we're dealing with this. Our job is to make sure this is right. They do it to the T. Super correct every day until they become friends, and then they become fond, and then they become colluders. All right, my internal controls. Strange bad fellow. Okay, it's time for one of the guys to kick in. Clinton.
I'm here.
Okay, why don't you jump in with internal controls over the same merchandising transactions we did in chapter what? Anyone?
Chapter 7.
Six.
Chapter 6, yes. What chapter are we in now?
This is our chapter 8, but your chapter 7.
Yes. But we did merchandising in the previous chapter, whatever it is, and now we're doing internal controls. All right, let's go. Internal control over merchandising transactions.
Oh no. Let me make sure I'm on the right page. That one.
Or you can read it off my screen, and that might make it easier.
Okay. When a system internal control is applied effectively to merchandising transactions, it can achieve important management goals. As we have noted, it can prevent losses of cash and inventory due to the theft or fraud, and it can ensure that records of transactions and account balances are accurate. It can also help managers achieve three broader goals. Sorry, keeping enough inventory on hand to sell to customers without overstocking merchandise, keeping sufficient cash on hand to pay for the purchases in time to receive discounts, and keeping credit losses as low as possible by making credit sales only to customers who are likely to pay on time.
How do you know who will pay on time?
When you have certain clients on credit,
Uh-huh.
and you track their payments of the credit issued to them.
Yeah, very good. Yeah, you track the credit history, their payment history, and if historically they pay you well, then you're prepared to take a risk with them again, of course.
Yeah.
If you open up a customer account and they're always late, you have to run them down all the time and all that stuff, chances are you're not going to give them any further credit. Chances are you should not.
No,
Okay?
not at all.
Because getting credit is a privilege and not a right. Some people think it's a right.
Oh yeah, I can tell you that.
Yeah, for sure, right?
Yes, sir.
Uh, they act like you had to give me this loan,
Yes, sir.
kind of thing. Okay, it's a strange phenomenon. Rather than I am so fortunate to be able to come in and for them to consider me credit worthy enough to loan me, deposit this money so that I may whatever it is.
Yes, sir.
Okay, very serious thing. All right, keep going.
In this section of the text, you will see how merchandising companies apply internal control activities to such transactions as cash sales, receipts, purchases, cash payments. Service and manufacturing businesses use similar procedures. Control of cash. One control that managers use to meet the broad goals listed above in the cash budget, which projects the future cash receipts and disbursements. By maintaining adequate cash balances, a company is able to take advantage of discounts on purchases, prepare to borrow money when necessary, and avoid damaging effects of being unable to pay bills when they are due. By investing excess cash, the company can earn interest until the cash is needed. A more specific control is the separation of duties that involve handling of cash. Such separation makes theft without detection extremely unlikely unless two or more employees conspire together. The separation of duties. One second, how I lose that just now? 1 second. Okay, bang. The separation of duties is easier in the large businesses than in the small ones, where one person may have to carry out several duties. The effectiveness of the internal control over cash varies based on the size and nature of the company. Most firms, however, should use the following procedures. Separate the function of authorization, record keeping, and custodianship of cash. Limit the number of people who have access to cash and designate who those people are. Bond all employees who have access to cash. Keep the amount of cash on hand to a minimum by using banking facilities and as much as possible. Physically protect cash on hand by using the register's cashier's cage and safe. Record and deposit all cash receipts promptly and make payments by check rather than by currency. How a person who does not handle or record cash make unannounced audits of the cash on hand. Oh, I hate audit for truth. How a person who does not authorize, handle, and record cash transactions reconcile cash account each month. Notice that each of these procedures have safeguard cash by making it more difficult for any one individual to have access to cash or to steal or misuse it without being detected.
Thank you very much, Clinton,
Yes, sir.
for that. So I hope even in preparing for examinations and all that crazy stuff, you're taking some of this stuff in for your own personal edification, to make sure that you know what you should and shouldn't be doing. That if you spot somebody doing it, that you have to do what you have to do if they are running off the company assets. I know this younger generation likes to talk about I am not a snitch and all this stuff. But the truth of the matter is, if you see somebody doing something wrong, typically you have a responsibility, even if you sometimes begin with that person, depending on the situation, and hope that they will take your advice. And if they don't, then your responsibility might extend then to taking the matter elsewhere, depending on its seriousness. Okay, for sure. Because make no mistake, when folks make up their mind to do something, they're probably going to try it, do it. If they plan to do it together in a manner that we call collusion, it's going to be hard to stop them from doing it. Okay? So our controls are designed to mitigate and keep our losses to a minimum. Remember, typically, no matter how many controls we have in place, there are limitations. And folks will always or do always seem to find a way around it. All right, thank you very much, Clinton. Let's see who's going to be my last victim for this evening. Chanel. Okay, Chanel is off. Having a... Oh, you're there. There you go. I thought you were off having a martini or somewhere.
I wish. Far from that.
All right. Are you in a position to read, or you want somebody to pinch it for you?
I prefer someone else to do it for me.
Sorry.
I prefer someone else to do it.
Okay, fantastic. So we'll have somebody pinch it to Chanel. Let's see who's going to do that. Lane,
Hi,
there you are. You want to pinch it for Chanel?
no problem.
Okay, beginning with control of cash receipts.
Okay. Control of cash receipts. Cash from sales of goods and services can be received by mail or over the counter in the form of checks, credit, or debit cards, or currency. Whatever the source of cash, it should be recorded immediately upon receipt in a cash receipts journal. Such a journal establishes a written record of cash receipts that should prevent errors and make theft more difficult. Control of cash received by mail. Cash received by mail is vulnerable to theft by the employees who handle it. For that reason, companies that deal in mail order sales generally ask customers to pay by credit card, check, or money order instead of with currency. When cash is received in the mail, 2 or more employees should handle it. The employee who opens the mail should make a list in triplicate of the money received. The list should contain each customer's name, the purpose for which the money was sent, and the amount. One copy goes with the cash to the cashier, who deposits the money. The second copy goes to the account department for recording. The person who opens the mail keeps the third copy. Errors can be easily caught because the amount deposited by the cashier must agree with the amount received and the amount recorded in the cash receipts journal. Control of cash over the counter. Cash registers and pre-numbered sales tickets are common tools for controlling cash received over the counter. The amount of cash sale is drawing up on the cash register at the time of the sale. The register should be placed so that the customer can see the amount recorded. Each cash register should have a locked-in tape on which it prints the day's transaction. At the end of the day, the cashier counts the cash in the register and turns it into the cashier's office. Another employee takes the tape out of the cash register and records the cash receipts on cash receipt for the day in the cash receipts journal. The amount of cash turned in and the amount recorded on the tape should agree. If not, any differences must be explained.
Now notice how this control thing works. They have their act together. Okay. Some person manages the machine, the other person comes and clears the machine. One makes a deposit, the other one posts the transaction. So clearly we have the separation of duties, control measure working very well in this particular setting. Could there be a breakdown? Sure, can always be a breakdown. Okay, remember, people can become buddies, or they may not become buddies, they just agree to become partners in crime. And so no matter how great your controls might be, if persons decide to become partners in crime, then you might still have a situation in your hand that you hope will be uncovered sooner rather than later. All right, keep going.
Large retail chains like Costco commonly monitor cash receipts by having each cash register tied directly into a computer that records each transaction as it occurs. Whether the elements are performed manually or with a computer, separating responsibility for cash receipts, cash deposit, and record keeping is necessary to ensure good internal control. In some stores, internal control is further strengthened by the use of pre-numbered sale tickets, an essential cash register or office or cashier's office, where all sales are rounded up and collected by a person who does not participate in the sale. The salesperson completes a pre-numbered sale ticket at the time of the sale, giving one copy to the customer and keeping a copy. At the end of the day, all sale tickets must be accounted for, and the sales total compute from the sales ticket must equal to the total sales recorded on the cash register.
Or else, okay.
Continue.
Mm-hmm.
Control of purchases and cash disbursements. Cash disbursements are particularly vulnerable to fraud and embezzlement.
Embezzlement, yes.
Embezzlement. In one case, the treasurer of the nation's largest jewelry retailers was
Keep going.
charged with having over 500,000 by systematically overpaying the company's federal income taxes and keeping the refund checks as they came back to the company.
Now, watch this. Watch what this guy was doing. He was overpaying what? What was he overpaying? The company's taxes. And when you overpay taxes in countries like the United States and Canada and the UK, then whatever the overpayment is comes back to the paying person as a refund. So if you're a taxpayer in the United States, for example, and your tax bill is actually $3,000 and you end up paying $5,000, what the IRS will do is to refund you the difference and send you a check for that amount. So what did this guy do? Clearly been around long enough because he's not dealing in just a few bucks. He decides that he will overpay the taxes of the company and of course arrange for the refunds to come to an account of his setting that he sets up. And the money either goes to him directly in some form of cash payment, check maybe, or wired directly into the account that he established to receive the refund, called a refund account. My. So, is this embezzlement? Well, let's see. Does anybody have Google? Somebody find the meaning of embezzlement. Let's see if that applies to anybody. Embezzlement. Let's get it over with. What is that?
That's theft or misappropriation of funds.
Yeah, theft or misappropriation of funds. Not too long ago, a couple of years ago, just before COVID, it was alleged that a certain person was successful in embezzling approximately $1 million from a local utility company in the Commonwealth of the Bahamas. Now, how the hell did that person pull that off? Clearly, the controls in that organization were substantially weak. Or clearly, that person colluded with somebody else to make that happen. Or clearly, only God knows what went down for them to be able to pull that off. Okay? It's clearly some serious control measures. And they have not been able to find sufficient evidence to indict that person. So it seems like they're going to get off with it. Imagine that. Okay. I only hope that the institution, whatever it is, takes stock and find every reason to improve their internal controls to the fullest. And then watch it every day. Because remember, every day somebody is planning to run off with something sooner or later. All right, keep going.
Avoid this type of theft. Avoid this type of theft. Cash payments should be made only after they have been specifically authorized and supported by documents that establish the validity of the amount of the claims. A company should also separate the duties involved in purchasing goods and services and the duties involved in paying for them. The degree of The degree of separation that is possible varies depending on the size of the business. Figure 7:1 shows how a large company can maximize the separation of duties. 5 internal units. The requesting department, the purchasing department, the accounting department, the receiving department, and the treasurer. And the 2 firms outside the company, the vendor and the bank, play a role in this control plan. Notice that business documents are crucial components of the plan. Figure 7-2 on page 330 and 331 illustrates a typical sequence in which documents are used in a company's internal control plan for purchases and cash disbursements. Item 1, purchase requisition. To begin, the office requesting department of Labuda Sportswear Company fills out a formal request for purchase requisition for office supplies. The head of the requesting department approves it and forwards it to the purchasing department. Item 2, purchase order. The people in the purchasing department prepare a purchase order. The purchase order indicates that Labuda will not pay and bill that does not include a purchase order number. The purchase order is addressed to the vendor, seller, and contains a description of the quantity and the type of items ordered, the expected price, the shipping date, and the terms and other instructions.
Mhm.
Item 3, invoice. After receiving the purchase order, the vendor, Henderson Supply Company, ships the goods and sends an invoice to Labuda Sportswear. The invoice shows the quantity of goods delivered, describes what they are, and lists the price and terms of payment. If all the goods cannot be shipped immediately, the invoice indicates the estimated date of shipment for the remainder. Item 4, receiving report. When the goods reach the Labuda's receiving department, an employee notes the quantity, type of goods, and their condition on our receiving report. The receiving department does not receive a copy of the purchase order or the invoice, so its employees don't know what should be received or its value. Thus, they are not tempted to steal any excess that may be delivered. Item 5, check authorization. The receiving report goes to the accounting department where it is compared with the purchase order at the invoice. If everything is correct, the accounting department completes a check authorization and attaches it to the 3 supporting documents. The check authorization form has a space for each item to be checked or as it is examined. Notice that the accounting department has all the documentary evidence for the transaction, but does not have access to the assets purchased, nor does it write the check for the payment. This means that the people doing the account cannot conceal fraud by falsifying documents. Item 6, check. Finally, the treasurer examines all the documents. If the treasurer approves them, he or she signs a check made out to the vendor in the amount of the invoice less any applicable discount. In some systems, the accounting department fills out the check so that all the treasurer has to do is inspect and sign it. The check is then sent to the vendor with the remittance advice showing what the check is for. A vendor that is not paid the proper amount will complain, of course, thus providing a form of outside control over the payment. Item 7, bank statement. The vendor deposits a check in its bank and the canceled check appears in the Labuda Sportswear next bank statement. If the treasurer has made the check over the wrong amount or alternate amount that was already filled in, the problem will show up on the company's bank reconciliation. As shown in figures 7-2, every action is documented and verified by at least one other person. Thus, the requesting department cannot void a kickback scheme to make illegal payments to the vendor because the receiving department independently records receipts and the accounting department verifies prices. The receiving department cannot steal goods because the receiving report must equal the invoice. For the same reason, the vendor cannot bill for more goods than it ships. The treasurer verifies the accounting department's work, and the accounting department ultimately checks the treasurer's work. The system we have described is simple, one that provides adequate internal control. There are many variations on it.
Thank you so much. Thank you so much for that energetic read. I hope that you guys have been able to suck up some of that real world stuff, because this stuff that she was just talking about is not just academic. These are things that occur. For example, if you go to Kelly's lumber yard, you will see a lot of this stuff in process where goods are coming in and somebody's in the warehouse receiving it, and then somebody takes it to the accounts department, and then the accounts department prepares the check and it goes somewhere to management upstairs to sign. And then once it's signed, somebody makes sure it's sent out to the vendor, and then the vendor makes sure that everything that they were supposed to get, they get, and that the accounting department does its verification of the items coming in from the warehouse. So this stuff is very real. And depending on where you work, you may or may not be, and again, this is a merchandising business. So you have requisitions and purchase orders and all this kind of stuff, warehouse receipt documents, etc. A service enterprise may not have a warehouse and receiving and all that stuff, but it'll certainly have a requisition, purchase orders, and things of this nature, and certainly to check and that part of the process. So wherever you are, some aspect of this process should be in effect. And if you work somewhere where these things are not in effect, then you need to take a closer look at what's going on. And if you are in a supervisory or management position, you need to make a recommendation. If you're an employee and you spot it just because you're doing this class, then you need to say something in the staff meeting or to your supervisor, or make a recommendation in the intranet, whatever the case might be, in order to correct the situation. And so if you look in figure 7.2 to which you referred, you'll see all the steps, what the name of the document, who prepares it typically in the real world, who it goes to, and who verifies. Excellent stuff to use, actually, maybe even where you work presently, to see how things ought to work in a controlled environment. Okay? And as you can see, it is not difficult. You just have to put it in place, like any other controls. Controls only seem difficult when you're looking at them. But once you implement them and you monitor them, then you appreciate exactly how critical and how important it is to do that. Okay. All right, you guys have been better than great tonight. We're going to stop there. When we come back next week, we'll finish up the petty cash transactions and accounting, and then we'll roll right into chapter 8. Please stay tuned. Grades will be rolling in soon. Please remember what I said. No matter what you get, do not let that interfere with your work and what you have to do between now and the end of the semester. Remember, it is not over until the fat lady sings. All right? Everybody have a great week, and I'll see you next week, same time.
Okay, guys, have a good evening.
All right? Take care. Be safe out there.
And I.
Good night.
Good night.
Good night, good night.
Good night, Clinton. Take care.
Yes, sir.